Hi guys, welcome back to Tax Q&A. If there's one thing getting more attention than IPOs right now, it's SME IPOs. And honestly, it's easy to see why. Just look at the year 2024. 239 SME IPOs hit the market and 70% of them listed at a premium over the issue price. Not just this, the top 5 companies delivered listing gains in the range of 300 to 400%. The overall hype can also be gauged by looking at the BSE SME IPO index, which tracks the performance of small and medium enterprises after their IPO. It has surged by 6,000% over the past 5 years and 146% in 2024 alone. Clearly, there's a lot happening in this space. But here's the thing, many people are jumping in without even understanding the basics. In fact, a lot of applicants don't even know what these companies do. They see the hype, grey market premiums, subscription numbers, and they rush to apply hoping for quick profits. So we decided to cover everything about SME IPOs in this video. So let's get started. To understand what an SME IPO is, let's break down the term SME and IPO. SME stands for Small and Medium Enterprises. These are smaller businesses with an annual turnover of less than 250 crores. IPO, we all know what an IPO is. This is when a company offers its shares to the public for the first time to raise money. Now, these not so big companies also need funds to grow, whether it's for expanding their operations, launching new products, or whatnot. So, they go for an IPO. Unlike the bigger companies that get listed and trade on main exchanges like BSE or NSE, SMEs have their own dedicated platform. BSE SME and NSE emerge. Well, SME IPOs are simply IPOs for smaller companies. While a regular IPO, which we also call a mainboard IPO, requires the company to meet certain guidelines in terms of size and other factors, these guidelines are more relaxed for SME IPOs. For instance, to apply for a mainboard IPO, companies must have a post-issue paid-up capital of minimum 10 crores. And for SME IPOs, the post-issue paid-up capital has to be between 1 to 25 crores. Moreover, a very important point. Generally, when you apply for mainboard IPOs, you must have noticed that the minimum investment amount is between Rs 10,000 and Rs 15,000. But for SME IPOs, this minimum investment amount is Rs 1 lakh. This is because SME IPOs are targeted at more informed investors like institutions or high net worth individuals, rather than the broader retail audience. But I guess those lines have gotten blurry now. Lastly, SME companies need to submit only half-yearly financial reports instead of quarterly, which reduces the compliance burden. Well, mostly the allotment process for SME IPOs is the same as that of mainboard IPO. If an IPO is undersubscribed, everyone who applies gets an allotment. And if it's oversubscribed, allotments are made through a lottery system. For example, suppose an SME IPO offers shares worth Rs 20 crores with a lot size of 1200 shares priced at Rs 100 per share. This means there are about 1,667 lots available in total. Now, if the IPO receives applications for 5,000 lots, it would be oversubscribed 3 times. In this case, the allotment will happen through a lottery system, and your probability of getting an allotment would become 1 in 3. So here as well, it's mostly luck that plays a role. To increase your chances, you can apply through multiple Demat accounts or go for the HNI category. Yes, you can. Once the company is listed, the shares are open for trading. But here's a bit of a nuance. Unlike regular IPO shares, SME IPO shares can only be traded in lots. The lot size is fixed during the IPO. Remember the example we discussed earlier? The lot size was 1200 shares. So you need a buyer who's willing to purchase the entire lot. And that's where it gets tricky. Finding such buyers isn't always easy, which makes liquidity an issue, and you might not be able to book profits on the listing day. I think we've already said the preface for this answer. As we just talked about this, the number one risk is liquidity. If we look at the NSE emerge, out of 377 companies, there are 69 companies whose share prices haven't moved at all. This means there was no trading activity here. So, if you applied for an SME IPO and let's say even got the shares, you might not be able to sell them very easily. Next, as these are smaller companies, there may not be as much information available. On top of this, most SMEs come with very few years of operational and financial history. As an investor, this makes it harder to assess their growth potential or the risk they face. That said, this doesn't mean SMEs are bad investments or that they can't deliver great returns. It just means you need to be more careful when choosing which companies to invest in. Do your research, understand the business, and only invest if you have long-term conviction in the company's potential. Yes, the SEBI has recently introduced several measures to make SME IPOs more transparent and reliable, primarily to dilute the risk that we just discussed. The major changes include: number 1, SEBI now requires SMEs to show an operating profit of at least Rs 1 crore in 2 of the last 3 financial years. This ensures that only financially stable companies can go public. Next, companies can no longer use IPO proceeds to repay loans taken from major shareholders or related parties. This change directs the raised funds towards business growth and operational needs. And lastly, existing shareholders can only sell up to 20% of the total IPO size during the offer. This keeps the focus on raising fresh funds for the company's growth instead of letting early investors cash out. See, at the end of the day, it's an IPO, so the tax implications are the same as those for a regular IPO. If you sell the shares on the listing day or any time within 12 months, the gains will be treated as short-term capital gains and taxed at 20%. However, if you hold the shares for more than 12 months, the gains will be considered long-term capital gains. These are taxed at 12.5%. And with that, it's a wrap. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. Catch you in the next one.